Wall Street's top analysts don't just pick stocks, they time catalysts. We're talking about earnings reports, data readouts, seasonal events. These aren't potential stories, these are scheduled catalysts with specific dates on the calendar. Today I'm sharing 5 stocks that smart money is piling into. Each has identifiable triggers that either recently happened or will in the next 30 to 90 days. They're in diverse sectors, so you're not loading up on correlated risk, but everyone has sparkling fundamentals that deserves your attention. Quick intro, I'm Steve Reitmeister with over 40 years experience analyzing the stock market. I'm best known for my many years as editor-in-chief at Zacks.com, sharing insights with millions of investors. I've built many quantitative systems over the years, including those that track which analysts actually get it right. Here's why this catalyst plus conviction framework matters so much. Stocks don't move on fundamentals alone. They move on events. You can have the best business in the world, but without a trigger, that stock will just sit there. When multiple top-tier analysts pile into the same name ahead of a known catalyst, they're positioning for something special. They're modeling the scenarios. They're putting their reputations on the line. The setup is defined. The timing is known. That's the edge. And look, if this kind of catalyst-driven investing interests you, do me a favor and hit that like button below. Okay, on to the stocks. First up is Micron Technology with a symbol of MU. They are a leader in memory chips for AI data centers, smartphones, PCs, a top 3 global supplier of high-bandwidth memory for AI workloads. By the way, I recently featured this ticker in my video about 3 AI stocks to watch. You can find the link in the description below. The catalyst. Micron just reported blowout earnings showing off 64% year-over-year earnings growth. Plus, they delivered strong guidance for the year ahead. What was Wall Street's response? A wave of buy recommendations with higher earnings estimates and higher target prices. The catalyst fired, but the full benefit in the share price has not yet been realized. Take a quick look at some key numbers. Micron only has a forward-looking PE of 13. That is much lower than the average 22 PE for large cap stocks and an outright steal versus the nosebleed 40 PE for a stock like Nvidia. Now, what's the growth driver? AI servers need massively more memory. Micron supplies it. Industry discipline means pricing power is back, higher profit margins as well. The earnings report confirmed demand is real and accelerating. So how about sentiment? Right now, 26 analysts track Micron on WallStreetZen. It has 17 strong buy ratings, 8 buy and 1 hold. That's 96% at buy or better. MU is in the high 200s right now, yet there are a slew of targets well above 300. That includes Kevin Cassidy, a top 1% analyst based on stock picking performance. He has a street high of 500 for the stock. When targets get that aggressive after earnings, it means the analysts see a multi-year cycle taking place. The Zen ratings confirms the post-earnings strength. MU has an overall A or strong buy rating, with exceptional component grades of A for financials, momentum, and value. On to our second stock, Ciena Corporation with a symbol of CIEN. They provide optical networking equipment for telecom, cloud providers, and enterprises. The infrastructure that connects data centers and moves massive amounts of data at high speed. What's the catalyst here? Ciena just beat earnings expectations as well, and Wall Street is scrambling to play catch-up. That's because revenue growth is finally accelerating after a 2-year-long slump. As for the growth driver, AI data centers need faster interconnects between servers and facilities. Ciena provides infrastructure for AI networking and top cloud providers like AWS, Azure, and Google. Each is expanding capacity to handle surging AI workloads. As for the analyst coverage, right now Ciena has 7 strong buy ratings on WallStreetZen. The current street high forecast is 305, which is about 40% above current levels. That target comes from Mike Genovese of Rosenblatt. He knows a thing or two about the best tech stocks, given that he's rated in the top 2% of all analysts for his stock picking performance. Moving on to the Zen rating, Ciena has an overall B or buy rating, putting in the top 20% of the 4,600 stocks we track. It also has strong component grades across the board, scoring highly for financial strength, growth, momentum, and sentiment. Sentiment is what the smart money is doing. This system confirms what analysts see. AI infrastructure companies like Ciena are enjoying a surge in demand. All right, quick pause. If you want to catch more timely setups like these before hearing about them too late on CNBC, then subscribe and hit that notification bell. Okay, I've said my piece. Let's keep rolling. Here is the third stock, Flowserve Corporation with a symbol of FLS. What's the business model? Industrial pumps, valves, seals for oil and gas, power generation, chemical plants, and the like. Boring? Yes. Profitable? Hell yes. So what's the catalyst? Flowserve just cleared 2 decades of asbestos liabilities, plus completed a strategic acquisition. Wall Street loves this kind of clean story setup where growth is no longer masked by legal baggage. What's the growth drivers? Energy infrastructure spending from LNG terminals, refineries, and chemical plants all need Flowserve's equipment. Aftermarket service is over 50% of their revenue mix. This comes with higher profit margins and is a recurring source of revenue. The Greenray acquisition adds another $200 million of this high-margin turbine services revenue to their business model. As for sentiment, FLS has a strong buy consensus among the Wall Street analysts we track. Most interesting is Andy Kaplitz at Citigroup with a target of 82. Andy is worth listening to because he is in the top 1% of all analysts for his stock-picking performance. The next earnings report could show more of that clean growth without the legal baggage, which would most certainly boost shares. The Zen rating supports this bullish case for FLS with an overall A rating, which makes it a very appealing strong buy. On top of that, we have strong ratings in several key component grades, including value and financial strength. The bottom line, FLS may be in a boring industry, but its growth and upside potential make it extremely exciting. Let's roll on to our fourth stock, Tapestry, with a symbol of TPR. Here we have a leader in luxury accessories like handbags, wallets, and shoes. No doubt you'll recognize their leading brands such as Coach, Stuart Weitzman, and Kate Spade. Gotta get my flex on a little bit here. Tapestry is up over 60% since I added it to the Zen Investor portfolio not that long ago. That's my stock picking newsletter. Check out the link in the description below. So what's the next catalyst for Tapestry? Holiday sales data is pointing to strong earnings in February, especially because Coach North America is surging right now, so mark your calendars. The growth drivers, as just shared, Coach North America sales are accelerating. This is a key trend reversal after years of sluggishness. Plus, China exposure adds upside potential. Overall pricing power remains intact despite some early tariff concerns. Don't forget that luxury consumers are less price sensitive, so Tapestry is doing quite well in passing that extra cost along without harming profit margins. How about analysts? 14 analysts cover TPR on WallStreetZen and has a strong buy consensus. JP Morgan's high-performing analyst Matthew Boss has the street high target of 148. Now that's about 20% upside from current levels. Yet, with their history of beat and raise earnings reports, I suspect earnings projections and fair value targets will keep moving higher from here, making the upside potential even more attractive. An added bonus, there's also insider buying taking place. Todd Kahn, the CEO of the Coach brand, is buying more shares. That signals serious management competence heading into the holidays. Looking at the Zen ratings, TPR has an overall B or buy rating, putting in the top 20% of the stocks we track. Looking at the component grades, it has an A for financial strength, which is very important, as well as a strong B ratings for both growth and momentum. Here's the bottom line. This is a fundamentally sound company riding a wave of earnings momentum. Add in the holiday season catalyst, and it's a prime time to snap up these Tapestry shares. Now on to our fifth stock, which is a bit more of a speculative pick in Jazz Pharmaceuticals, symbol JAZZ. Here we have a specialty pharma company with a coveted franchise of sleep disorder medications that generates consistent cash flow. But the growth upside comes from oncology. The catalyst here, Jazz has a cancer therapy called Zihara. Pivotal trial data is coming soon. If it works, this could be a new multi-billion-dollar franchise. As a side note, I don't typically like this type of catalyst. Biotech is volatile. But what I do like is that Jazz already has a stable business we can rely on. If Sahara works, it unlocks massive upside potential. If not, the base business still supports the higher valuation. Wall Street's betting that things work out for Jazz. Right now, of the 11 analysts covering Jazz on WallStreetZen, there's only one hold rating. That is very bullish. Even more impressive is the street high target of 247, which suggests nearly 50% upside potential from where we stand now. Not surprisingly, the Zen Ratings has computed an A overall rating for the company, putting the top 5% of all stocks we analyze. The component grades are also strong with A for value and B for growth and momentum. This makes it a well-rounded, attractive stock. Yes, there's always risk with biotech. If the data disappoints, shares could drop. But bottom line, this is a strong catalyst play for those who can handle the biotech volatility. There's high upside potential if their new oncology drug is approved. Drop a comment below and tell me if you like any of these stock picks. If the answer is yes, then I send out a free email every Sunday featuring 5 more top stock picks. The link to the free newsletter is in the description below. And in case you're curious how I found these stocks, they all came from a wide range of data and tools on WallStreetZen.com. This includes proprietary coverage of Wall Street Analyst, where we actually share their performance track records and their top stock picks. On top of that is the 150-factor fundamental review of our AI-driven quant model, the Zen Ratings. You can get free Zen ratings on over 4,600 stocks at WallStreetZen.com. Go ahead and enter a ticker to see these vital ratings on our quote pages. If you like this video, I strongly suggest you follow up by watching my next video sharing 3 undervalued stocks to buy and hold in 2026.